Have you ever wondered what would happen if everyone just stopped buying US debt? Buckle up because the consequences could shake the entire world. Let's dive right in. Picture this: the United States is a giant cake. A delicious cake, but it's got a lot of layers. Each layer represents money the government borrows so it can keep the country running smoothly. This borrowing is called debt. Now, what if one day everyone simply decided not to buy slices of that cake anymore? That's right. What if they stopped buying US debt? First things first, let's break down what US debt really is. When the government spends more money than it collects in taxes, it borrows money to cover the difference. To do this, it sells something called treasury bonds. Think of these bonds as IOUs. When you buy one, it means you are lending money to the government in exchange for some interest later on. It's kind of like a super safe savings account, right? But what happens when the buyers for those IOUs disappear? Well, one word: chaos. Imagine if no one wanted to lend the US government money anymore. Interest rates could skyrocket. You might be wondering, what does that mean for me? Well, when interest rates rise, it affects everything. It means getting a loan for a car, house, or college education would become much more expensive. So if you want to buy something big like a home, you'll have to pay a lot more each month. That can hurt a lot of families right in their wallets. Now, let's think about another layer of the cake. What happens to our economy if people stop buying US debt? You see, a significant part of our economy relies on people believing that it is safe to invest in US bonds. If that trust disappears, the stock market can start to tumble. Investors might panic and sell off their stocks, leading to a chain reaction. More selling means lower values, which can cause companies to lose money, lay off workers, and so on. It's like a domino effect, and nobody wants to see that, and it doesn't end there. The US dollar might take a hit too. The dollar has been seen as a safe and strong currency. If there's no demand for US debt, people could lose faith in the dollar's power. If that happens, it could be worth less when you trade it for other currencies. All of a sudden, your dollar doesn't buy as much, which means you'll have to spend more on everyday things. Yikes, that's sure to make shopping trips less fun also. Let's consider what would happen to the government itself. If those treasury bonds aren't flying off the shelves anymore, the government might run into a real pickle. With less money coming in, it could be forced to cut programs that help citizens. That means less funding for schools, roads, healthcare, and all sorts of things that many people rely on. Nobody wants to see cuts like that. Now, while the picture might seem pretty gloomy, don't lose hope just yet. The government could come up with plans to handle such a situation. They might decide to print more money. Sounds simple, right? But printing more money could lead to other problems like inflation, where prices go up because there's too much money in circulation. If everyone has more cash, prices will rise, and soon the extra dollars won't buy you as much as they did before. It's like getting excited about a sale, only to discover prices have jacked up even higher. Okay, let's reflect a moment. So we've talked about rising interest rates, a shaky stock market, a weaker dollar, and possible government cuts. It might feel overwhelming, but it's crucial to understand. Because if everyone stops buying US debt, our whole economy feels that tremor. It's a reminder of how interconnected our financial systems are. You might be thinking, what can we do? Well, one way is to stay informed about how our government works and how our economy runs. Understanding this can help you recognize when something changes and make better financial decisions if the times get tough. So it's not just about the government, it's about you too. Now let's not forget about the global perspective. The world watches the US closely. If the US economy falters, it could have ripple effects around the globe. Countries trading with us could be affected, and they might not be too happy about it. We're all linked in this great big world economy, and shaky US debt doesn't just concern Americans, it concerns everyone. So here's an interesting thought. What if some countries decided to sell off their US bonds all at once? That could send shockwaves through the financial markets. It's a delicate balance. Just like that cake we started with, one slice missing can topple the entire dessert stand. Alright, let's recap. Stopping the buying of US debt could lead to rising interest rates, a dip in the economy, a weaker dollar, potential government program cuts, and global consequences. All of these can impact everyday people in significant ways. It's a vivid reminder that money matters and that financial systems depend on trust and behavior. It's hard to predict exactly what might happen if everyone just stopped buying US debt. Economies are complex creatures, and they don't always respond the way we expect. Just keep your eyes open. You never know how the next twist in our financial story will unfold. What was your favorite insight? Want more ideas like this? Follow for more.